Hey, good morning. This is Mayor Valensky with Driving Markets. Anything said in this piece is only an opinion. It's not investment advice, not financial advice. I'm not a licensed financial advisor. I'm not a licensed investment advisor. It's purely for media broadcast. If you make money, that's great. If you lose money, unfortunate, but I don't gain anything by you making or losing money at all. So let's get going. So on Friday, the markets tumbled, especially the Nasdaq, and the reason behind that is because, again, we've got fear creeping back into the markets on concerns about interest rates and inflation. As I've been saying from the beginning of the year, inflation is not going away. There is a constant supply chain issue driving inflation higher, and then frustrated more by the macro geopolitical situation of Russia invading Ukraine and the impact it's had on soft grains, commodities, oil and metals across the board. So take that into account when you're looking overall at financial markets, especially if you're going for a long-term trade. A long-term trade would be anything from 2 months, 3 months, 6 months, etc. And the markets are going to go down in the 6-month period. During that period, we've had a bit of a bear rally starting back in June, and that's pushed markets up. It's all false because the basis of it is purely based on an slightly oversold position in June, and therefore the investors came in and started buying into stocks to push the markets up, but that can't be sustained. So the Dow, the S&P, the Nasdaq, the FTSE and the DAX are looking far too high. The economic fundamentals in the marketplace and the global markets are showing overall a downtrend, and you will see a spike in inflation come along in September, October, and that will push up interest rates even higher. Why? Because oil will go up, and also the grains, energy costs and natural gas are just constantly going up, and that's going to impact overall in the official rate. Now, the official rate is not real inflation. That's just a basket of goods that the economies and the central banks and the statistics office issue. But the real inflation, the one that's hidden inflation, one that you feel the pinch in your pocket, is running at around about the 20-30%. In the US on Thursday and Friday, a company called Bed, Bathroom and Beyond dropped more than 40% after Ryan Cohen, the billionaire investor, sold all of his holdings in Bed, Bathroom and Beyond because he said that the company's not going anywhere and likely to lose money. And that could be an example and a sample of what's going to be happening overall in financial markets and companies and corporates in the next 12 months. You're going to have a lot of companies that are going to lose huge amounts of value in their shares as interest rates rise and the cost of borrowing is just too much for them and is impacting on their balance sheets. Therefore, investors are getting very, very concerned. The Nasdaq was sold off because the 10-year Treasury went to 2.98%. Now, if the 10-year US Treasury goes above 3%, which is going to push the cost of borrowing significantly higher, and these high-tech stocks and these high-risk stocks, whether they are Nasdaq or whether they're growth stocks within the high-tech sector or things like cryptos, will be sold off as interest rates and yields rise, because investors will look at the risk value and the return on their risk and say, why should I take the risk on something that might not return any money? Let me go into a secure investment, whether it's a bond or whether it's a bank account, etc., etc. Okay, sorry, there was a bit of an interruption there. Okay, so let's look at cryptos. On Friday, Bitcoin fell 10%, which was a massive drop. Again, that is due to the fact that you've got the appetite for high risk is moving away. I've been calling for Bitcoin down. I've been telling you on this YouTube channel and on Instagram, Bitcoin is a sell at 25,000, 24,000, 23, 22. It's now at 21,300 and probably going to test the 20,000 level. The overall sentiment and environment and the atmosphere in the market has changed dramatically, and there is going to be a downward trend going into September, October, November. So those of you who are long, maybe look to either hedge it or start taking out some shorts as in the markets, as the markets develop. Going forward, in this week, you've got in the States the PCE, the personal consumption expenditure, and that would be a good indication as to where inflation is going and sentiment within the market as the consumer begins to tighten their belt, or they should be tightening their belt, and they can see that the cost of living is rising. So it's a good figure to watch. That comes out next Friday. That's all for now. Mayor Valensky, Driving Markets. Have a good day.